Hi, Andrew. It's good to have you with us today. I know we have a lot of ground to cover on the topic of battery energy storage project development. Before we jump into that, can you give us a quick introduction of yourself and share a little bit about what Spearmint Energy does?
Thanks a lot. I'm Andrew Waranch. I'm the founder, president, and CEO of Spearmint Energy. We have two sides. One provides trading and offtake around renewables. One is a development company which builds large-scale batteries across the USA. I have a 27-year career in the power space. I've worked for banks, utilities, hedge funds. I've owned combined cycles, and I really consider myself a modeler of the power space. And for many years, I had batteries in my model, but they were very expensive and they didn't make a lot of money and they didn't make a lot of sense. All that changed in around 2019 when the price of batteries they had been down 90% in 10 years. And so they quickly found themselves, I guess, unexpected to the market in a position of profitability. And so in 2020, I started developing in the battery space. And then in late 2021, we put the Spearmint team together. Early 22, we launched Spearmint Renewable Development Company.
Great. Thank you for sharing all that. So I know in January we covered this news. It was all over, the news wires. But Spearmint released some pretty significant news that it completed its Revolution project, a 150 megawatt, 300 megawatt hour battery project in West Texas, and that's one of the largest battery energy storage projects in the United States. Correct?
Yeah, that's correct. Our Revolution battery is in McCamey and Upton County, Texas. It is one of the largest batteries in the US and in the world for that matter.
So then I know Spearmint added Nuveen to its 200 million enhanced credit facility. And then you guys also secured a 47.5 million project finance term loan from Manulife. I was hoping we could talk about some of the other initiatives that are unlocking development for battery projects such as these. So without further ado, can you talk about how the IRA has impacted battery energy storage project development since it was passed? And what do you think the battery storage development environment will look like in 2024?
So prior to the passage of the IRA, battery energy storage was economic in Texas and California, but the rest of the country didn't quite pencil yet. Our view was to begin development in those states with an expectation that at some point in the future, the near future, those would be profitable and we developed. When the IRA was passed, it accelerated that thesis quite aggressively. And so now we believe battery energy storage is economic in most parts of the US. And so we initially saw a rush to procure batteries and other equipment. And as with many subsidies happen, the market was a little bit out of whack in terms of supply and demand of parts and labor. Uh, and so I think a lot of that's been resolved. But overall, the global demand for electric infrastructure, substation equipment, breakers, control houses, and such, has led to some short-term shortages in that equipment. And so BESS development is economically more profitable with the IRA, but it has led to a significant issue with some parts as well as some service providers. There were times last year when there weren't enough engineers to go around or lawyers to go around because the act just incentivized so many people to move forward. In 2024, the development looks great. Some of those supply chain bottlenecks are unlocking. I think the amount of developments increasing. I think that both solar and wind as well. And as solar and wind increases, the need for batteries also increases. I think our development this year, where we'll probably have construction of several projects in 2024, will be two, three, maybe four times larger than in 2023. There used to be a shortage of tax equity before the IRA unlocked something called transferability. But with transferability and the ability for large-scale corporates to participate, it has removed that bottleneck. And now I believe there's actually more of an appetite than there are products to supply them. So 2024, it's a great time to be in renewables, and things are just getting better.
Great. Thanks, Andrew. So, will regulators make qualifying for the IRA's benefits easier for battery storage developers, in your opinion?
So the change to the IRA have made it easier for projects, specifically BESS projects, to qualify. Previously, they had to be paired with solar, and there was a lot of very difficult charging restrictions. That's no longer the case. So both in qualifying and creating a market for transferability have both, dramatically, led to the ease of using the IRA for BESS.
All right, thank you. So, you mentioned the tax equity point. Do you feel that the appetite for tax equity among investors and developers is changing?
So I think that previously there was a few large banks that dominated the market for tax equity. They were rather conservative, and that led to a bottleneck in tax equity for renewable projects. Now the transferability has been unlocked, and the market is getting a little less risk averse. We're seeing more insurance companies step up and offer a product to help make investors feel more confident. The universe for potential tax equity investors, whether in partnership flip structures or just in credit transfer structures, is 5, 10, 20-fold. We see dramatic increase in interest from corporates. I'm meeting with several US corporates in the next month to talk through options. And these are people that have never traded tax credits before. I think also it's important to note that the 3-year look back, it does have a limited window. And so you can only go back 3 years at a time. So whatever you fail to purchase to reduce your tax liability for 3 years ago, you can never go back and get it. Tax credits also can be used to cover quarterly filing estimates. So if you are a corporate about to pay your quarterly estimate, you would prefer to buy credits at a discount instead of paying the government the full amount. And so it's really rather amazing how both the 3-year look back and the quarterly filing deadline has sort of changed the market very quickly.
Absolutely. So, in terms of tax credit policy, what factors are affecting best developers' ability to access tax credits?
Sure. Well, the ability to access tax credits was, as we said, changed completely in the IRA. We now have a lot of accounting firms, law firms that are pitching their client on the ease and use of tax credits. And so there is still an education process in play. But in the limited amount of time since the IRA has really gotten going, again, the speed of demand growth has led to what I believe is a shortage of projects, not a shortage of investors, which is why the price for many credits is up to 95 cents on the dollar. I don't know how much higher it goes, given that you do buy insurance and you need a little bit of a profit incentive for the buyer. So perhaps 96 or 97, maybe 98 is the best case you can get. But there's also the question of monetizing the depreciation or the bonus depreciation, which can somehow even get you a higher price. So the appetite is strong and growing, and I think will remain so for many years to come.
All right, great. Thank you. So, can you talk a little bit about how the current tax credit policy might alter the rate and geographical spread of best development?
As I said at the beginning, the geography prior to the IRA was California and Texas. That's where things made the most sense. Now we believe it can make sense almost anywhere. And the limiting factors are a lot more about local interconnection or the availability of crews to install projects. The ISOs are dealing with, I don't want to say struggling with, but dealing with the massive number of new BESS projects being developed. They were understaffed. And in fact, a lot of the best developers have hired the same staff that's supposed to be approving the projects to work for the developers. In some cases, leaving the TDSPs, the ISO, severely understaffed, right? And so geographically, most of the US is a great place to be right now. The real demand will come, where it's needed. And so places with lots of solar, places with lots of wind, and places with lots of load volatility will be natural homes for battery energy storage facilities.
All right, great. And then kind of rounding out the tax credit point, what is attractive to BESS developers about tax credits versus other financing structures?
Developers like me love to use the IRA and the tax credits as a complement to existing equity and debt. It's really about how everything pairs together. As you know, the current IRA allows for 30% in tax credits, 40% if you're in an energy community zone, 50% if you also use made in the USA batteries. I don't think a lot of products will get all three credits and get that 50%. I think most of them will hover somewhere between 30 and 40%. Now, that's not applicable to all of the costs, it's to some or most of the costs. And so those tax credits will all of a sudden become a pretty meaningful percentage of the available or of the required capital for funding. That being said, investment demand on both the equity and the debt side, US, Europe, Asia, the Middle East, even, there is enormous interest in investing money in the renewable space. And so we're still getting significant equity and debt investors coming in. And so the IRA and the ITC just, changes the ratio a bit, but you still need all the pieces.
Sure. Yeah, of course. So there's also been a lot of speculation about the impact of the upcoming election on the infrastructure and energy development landscape. I'm sure you've been hearing. So how do you think the upcoming presidential election will impact the regulatory and tax landscape for development of battery storage projects?
So that's a really good question. We talk about it quite regularly. It's on the top of everyone's mind. I would expand that beyond just federal to state as well, as a lot of state elections will drive local growth of BESS. At the federal level, certainly there's been talk about various policies or potential policies to reduce the effects of the IRA. There's a lot of Republican states which are benefiting from the IRA. And I think that when analysis is done, it will show that the IRA benefits everyone. And so I think that it's less likely that it gets repealed in full. There might be individual components that are reined in as they may have benefited one state or another too much relative to the rest of the country. But overall, I think the IOA will remain, but there will be small changes around the edges to show some political wins. But the meat of it will be grandfathered in. Maybe I'm overly optimistic, but I do feel as a battery developer that batteries are necessary everywhere regardless of carbon or climate goals. Batteries reduce volatility, they add grid resiliency, they balance solar and wind, they make everything safer and work better. And so I think we're battery true believers, regardless of the election.
Great. Thanks for sharing your views on that. I know it's hard to predict exactly how things will shake out, but it's nice to hear your thoughts on that. So, finally, kind of rounding that out, how are battery storage developers adjusting their pipelines and strategies ahead of this election?
There are certain people that are taking a bit of a pause ahead of the election. There are some of them that are trying to raise capital immediately before you get into the fourth quarter, where there's more volatility. So I think that's one thing that's going on is the capital raising is happening a bit earlier in the year than people would have expected. To me, that's the biggest change. With respect to overall pipelines, I mean, batteries work in California and Texas with or without the IRA. The interesting thing that a lot of people aren't talking about is if the IRA were to go away, yes, there's a lot of battery projects that would be uneconomic, but the ones that would remain would see much higher revenues. And so you would actually get higher revenues in those projects, which would balance off the effect a little bit. Overall, I think you're going to see a lot of capital deployed in the first half of the year. And the second half of the year, I would expect things to slow down as the political landscape becomes more volatile and people take more of a wait and see approach.
Yeah, that's a good way to leave off. Thank you so much for joining today and talking about this. And it's been really great speaking to you and hearing about, Spearmint Energy's initiatives and what you guys are thinking in terms of the future. So congrats again, and thanks for joining.
Thanks so much for your time. We're extremely excited at the prospects for battery energy storage today and in the future. And we really believe that the benefits that we offer over natural gas fired peakers, we're cheaper, we're faster, we're stronger, more reliable, and really will set the tone for the next couple decades.